Alright students, let's go ahead and now revise the next chart. The next chart is relating to section number 18 of your chapter of ITC. Everyone over here in your chapter of input tax credit, in the previous videos, input tax credit may we have revised section number 16, we have revised section number 17. Section number 16, 1 went ahead and told who is eligible, registered person is eligible. Section number 16, 2 told what are the conditions subject to which you are eligible, right everyone? Section number 16.3, depreciation taken on the tax component, don't take. ITC taken, don't take depreciation. Section number 16.4, maximum time limit to go ahead and take the credit is September month ka monthly return or annual return ka actual date, whichever is earlier. Section number 17.1, using something for business purpose, non-business purpose, take the credit relating to business purpose. 2 went ahead and told if you are using something for taxable supply and exempt supply, take the credit for taxable supply. Section number 17.3, exempt supply ka definition for the purpose of apportionment. Section number 17.4, banking company take 50% credit, forget 50%, distinct person take 100% or go for apportionment. 17.5, block credit. 17.6, government will tell the apportionment method and government has prescribed rule number 42 and 43. Now we are going to do section number 18. Section number 18.1 says what are the special circumstances when the credit will be allowed. Section number 18.1 told about special circumstance. 18.2 told special circumstance may credit will be allowed only of those invoices which are up to 1 year old. Invoices older than 1 year, credit will not be allowed. Section number 18.3 told when you transfer the business, transfer the credit also. Section number 18.4, reversal of credit when normal person becomes composition, taxable supplies of a registered person becomes exempt supply. Section number 18.5 gives Gyan, total bakwas, and 18.6 is when you are going in and supplying plant and machinery on which you are taken the ITC, you pay the tax on transaction value or reduced amount of ITC, whichever is higher. Let's do section number 18.1. Section number 18.1a goes ahead and says if you are going ahead and taking new registration, basically once you become liable you should apply within 30 days. If you have gone ahead and applied within 30 days and registration is granted, it is effective from the date of you becoming liable. So once you become liable, 1 day prior, whatever input is there in your stock, input is there in your semi-finished goods, input is there in your finished goods, 1 day prior to the date of becoming liable, you will be eligible to take the credit. Sir, if I don't go ahead and apply within 30 days, always remember credit will not be allowed of your stock if you have not gone ahead and applied for registration within 30 days. Basically, the person will not be allowed to file ITC 01 and take the credit. Section number 18.1b goes ahead and says if you have gone ahead and taken voluntary registration under section number 25 subsection 3, then in that scenario always remember the day registration is granted, from that date is valid. So 1 day prior, whatever input is there in your stock, semi-finished goods and finished goods, you will be able to take the credit. Right everyone? From 1 day prior to the date of grant. Always remember, composition person becomes a normal person. He starts paying tax under section number 9. From the day he starts paying taxes under section number 9, 1 day prior, whatever input is there in stock, input is there in semi-finished goods, input is in finished goods, he will be able to take the credit. Plus capital goods ka credit also allowed, 5% reduced per quarter or part thereof. Right everyone? Then section number 18.1d says if you are supplying exempt supply, basically you are a registered person and your exempt supplies have become taxable supply. You are a registered person. Remember 18.1d is applicable only if you are a registered person and you are supplying exempt supply also, and that exempt supply have now become taxable supply. Then the date with this exempt supplies have become taxable supply, 1 day prior, whatever input is there in your stock, input is there in your semi-finished goods, input is there in your finished goods, which is with respect to that exempt supply, of that you can take the ITC. Plus capital goods which were used for that exempt supply, that ka credit also you can take 5% reduced per quarter or part thereof. Then section number 18.2 is applicable only in special circumstances which are told under section number 18.1a, b, c, d, and it says you will not get the credit of inputs or capital goods for which invoices are older than 1 year. Right everyone? Please be very careful. No ITC of goods, basically input or capital goods for which invoices are older than 1 year. Rule number 42 goes ahead and says manner of claiming the credit under section number 18(1)(a), B, C, D. How will you do it? They are going ahead and telling under section number 18(1)(a), B, C, D. Anyways, input is allowed. C and D में capital goods का credit also will be allowed. From the date of invoice, you have to reduce 5% per quarter or part thereof. You have to go ahead and file within 30 days plus 30 days का extension can be given. You have to go ahead and file form GST ITC 01 along with the form GST ITC 01. If the amount of claim is greater than 2 lakh, you will have to go ahead and put one CA certificate, right everyone? And in the ITC 01, when you are going ahead and filing, you have to go ahead and tell what is your input in stock, what is your capital goods ka detail, all those details have to be given. Also remember 18(1)(c) and D may, whenever you are going ahead and claiming the credit, that will be verified with the supplier ka GSTR 1 or GSTR 4. Then, sir, section number 18(3) goes ahead and says, if you have gone ahead and transferred your business to someone, might be there is a sale which has happened, merger, demerger, amalgamation, lease, transfer of business, including that, then you are allowed to go ahead and transfer your credit to the other person ka e-credit ledger. Always remember, transferor going ahead and transferring the business as going concern is exempted. Transferor, if he is a registered person, and transferee who is there has to take registration under section number 22 subsection 3. Now transferor in his e-credit ledger, whatever credit is there, he can transfer it to the transferee. He just have to file GST ITC 02. Transferee will accept and the credit will be transferred to his e-credit ledger. Always remember, registered person is allowed to transfer the credit to the e-credit ledger of the transferee. He will have to go ahead and follow rule number 41, which says you have to file a declaration ITC 02. Buyer will accept and the credit will be transferred. In case of demerger, always remember, if you are a big unit, you have demerged a small unit, then in case of demerger, you will go ahead and transfer how much? In the asset ka ratio, you have to go ahead and transfer the credit. 800 crore ka asset, you kept it. 200 crore ka asset, you demerged. You give it to the demerged unit. In that scenario, 8:2 ka ratio mein your credit should be apportioned. Then, no time limit to file the declaration, which is ITC 02, but CA square, chartered accountant or cost accountant certificate mandatory irrespective of the amount. Now, always remember one thing, one more thing they have gone ahead and told, if in one state, same state may you have gone ahead and taken one separate registration for a separate unit, then in that scenario, from here to here, you can go ahead and transfer the credit. How will you go ahead and transfer? You have to file ITC 02A within how many days? 30 days. But always remember, only if you have taken separate registration within the same state, you can transfer the credit by filing ITC 02A, and there is a time limit to file ITC 02A, which is 30 days. ITC 02, there is no time limit, but ITC 02A, there is a time limit of 30 days. Now, everyone over here, if you were a composition person, you became normal person, government gave you the credit. What if normal person becomes composition? Whatever credit is given, you have to reverse it. Sir, if I was doing exempt supply and now I became my supplies became taxable supply, then I will get the credit, correct? If taxable supplies of a person becomes exempt supply, he will have to go ahead and reverse the credit. Are we clear? Here you are given the ITC, here you are given the ITC. But if you become normal person to composition, ITC has to be reversed. Taxable supply is becoming exempt supply, ITC has to be reversed. Reversal, always remember one thing, whatever stock is remaining, stock ka reversal has to be done full. Capital goods ka reversal, the ITC taken divided by 60 months into the remaining months. Right everyone? Always remember, payment of ITC on switching to composition means normal person becoming composition or supplies becoming exempt supply, means your taxable supplies of a registered person might become exempt supply. Then rule number 44 talks about the manner of reversal, which says credit of input with respect to input in stock, semi-finished goods and finished goods, ITC calculated proportionately. Basically, you have to pick up the invoices where you have gone in and taken the credit of those invoices, then that much amount has to be reversed. Right everyone? Might be you have taken the credit for 100 goods, only remaining is 50, then reversal will be done only of 50. Then capital goods ka reversal, always remember whatever the ITC you have taken divided by 60 months multiplied by the balance month. Monthly reversal, monthly calculation ka basis pe reversal has to be, not monthly reversal, monthly calculation ka basis pe reversal has to be done. Amount of reversal calculate separately for CGST, SGST, IGST or UT GST. Always remember, if you go ahead and tell, sir, more than 1 year old, I don't have invoice. Government is telling, Baba, when I am giving you, I will not give you if invoices are older than 1 year. But when you are giving, you have to go ahead and give, even if the amount or even if the invoices are older than 1 year. Sir, I lost the invoice. Baba, in that scenario, please go ahead and take the fair market value, and on the basis of that, you have to pay the tax. Are we clear, everyone? You have to go ahead and calculate your reversal. Sir, how will I go ahead and do amount which is determined above? Basically, how much ever is the amount of reversal that will be added to your output tax liability. You have to file one form GST ITC 03. There is no time limit to file ITC 03, and no CS certificate is required except when fair market value is used. It will be certified by a practicing chartered accountant or cost accountant. Right, everyone? Always remember section number 18.5 is total bakwas. 18.5 goes ahead and says please follow rule number 40, and for reversal follow rule number 44. Okay, we will do. Section number 18.6 goes ahead and says if you are going ahead and supplying your plant and machinery and capital goods, you will have to pay tax on transaction value or the ITC minus 5% per quarter or part thereof. That is the reduced amount of ITC, whichever is higher. Be very careful in your exam. Only if they have told you plant and machinery pay ITC was taken and now that is sold, then tax on transaction value or ITC availed, whichever is higher. If you are not taken the ITC at the time of buying those goods, then only tax on transaction value. Be very careful about it. But if tax was taken, ITC was taken at the time of purchasing, means then whatever is the reduced amount of ITC or tax on transaction value, whichever is higher. Always remember one thing is scrap. If mold, dies, fixtures, zigs, etc. is sold as scrap, you just have to pay tax on transaction value and chapter is over. Right, everyone? Now, everyone over here, there are three circulars which are given. Can you guys see over here? Circular with respect to ITC apportionment in case of business reorganization, section number 18.3, read with rule number 41 in case of demerger. People went ahead and asked some question and government went ahead and replied. People went ahead and asked, sir, when I have to go ahead and see asset ka ratio, will I see all India asset ka ratio or I'll see state-wise asset ka ratio? Government went ahead and told, for ITC apportionment, value of the assets of the new unit to be taken at state level, that is at distinct person level and not at all India level. You will not see all India level ka asset ratio, you will see state-wise asset ka ratio, and on that basis you will go ahead and transfer the credit. Then people went ahead and asked, do I have to file ITC 02 in every state? Government went ahead and told you have to file ITC 02 in case of demerger, basically in those states only where both transfer and transferee are there. If one state may transferee is not there, then why will you file ITC 02? You have to file ITC 02 only in those states where both transfer and transferee are registered. Then people went ahead and asked, sir, you went ahead and told the apportionment formula, basically on the asset ratio you have to go ahead and transfer the credit only in case of demerger. Then government went ahead and clarified it will be applicable. Asset ratio ka basis pe you can transfer the credit from your e-credit ledger to the transferee. This is applicable in any form of business reorganization wherein basically you have gone ahead and cut a part of your business and transferred to someone else. Then that much part, how much you have transferred to someone else, that much ka assets ratio mein basically you can transfer the credit also. It is telling it is not asset ratio ka basis pe apportionment. Formula of apportionment on the basis of ITC is not basically formula of ITC apportionment, which is basically asset ka ratio mein apportionment. It is not applicable only for demerger. It is applicable for all business reorganization wherein basically one part of the business is hived off and transferred to someone else. Can I go ahead, everyone? Then apportionment ratio shall be applied to the total ITC. Government people went ahead and asked, CGST I have 5 lakh, SGST I have 5 lakh, IGST I have 10 lakh, means I have 20 lakh. Supposingly I have to transfer 50%. Will I apply that apportionment asset ka ratio on the total amount or each head? Government went ahead and told apply on the total amount. If you go ahead and transfer 50%, then apply on the total amount 50% asset. If you are transferring 50% asset, you will transfer 50% credit. So apply on this total amount. So you have to transfer 10 lakh. Now people went ahead and asked, this 10 lakh should be from which head? Government told your wish, you want to transfer from whichever head you want. They are telling transferor shall be at the liberty to determine the amount to be transferred from each head. If you want from IGST, give IGST only total 10 lakh, no problem at all. Whichever head you want, you can go ahead and transfer from that head. Then people went ahead and asked, sir, we have to go ahead and transfer the credit. We will need what? How much is the ITC to be transferred? For that, we will go ahead and need e-credit ledger ka balance. Correct, everyone? Multiplied by ratio of asset. Yes or no? So people went ahead and asked, sir, Which day का e-credit ledger का balance? So government told the day you are filing ITC 02, that day का e-credit ledger का balance you take it. People asked which day का asset का ratio? Government went ahead and told whatever is the appointment date of demerger, that day ka asset ka ratio can be taken. Asset ka ratio multiplied by the ITC ka balance, you will know how much the amount is to be transferred. Remember always ITC apportionment. When you are going ahead and apportioning the ITC, you will apportion on the basis of asset ka ratio. Asset ka ratio to be taken at state level, that is distinct person level. ITC 02 to be filed only in those states where transfer and transferee both are registered. Then apportionment ratio, please apply to the total balance of the e-credit ledger balance, and then you have to go ahead and transfer that amount. But transferring the amount, you can transfer from any head which you want. Then people went ahead and asked what is the apportionment formula, which is told basically asset ka ratio may have to apportion, is applicable only on demerger. Government went ahead and told it is applicable on all forms of business reorganization where basically one part of the business is hived off, means cut off. Then people went ahead and asked which day ka ITC ka balance and which day ka asset ratio has to be taken. Government went ahead and told ITC ka balance on the day of filing ITC 02 and asset ka ratio appointment date of demerger. In my opinion, they should ask a small question from this. I like this circular. Next, sir, circular on free gift and sample. Everyone, free samples and gift related one circular was there. Government went ahead and clarified simply. Government went ahead and told if you bought glass and you gave glass as free, it is schedule 1 permanent transfer of business asset where ITC has been availed on glass. Hence, it is a supply and ITC will be available. Are we clear, everyone? I went ahead and bought some plastic, made a glass out of it and then gave the glass free, that is not a supply, and ITC will be blocked. Right, everyone? Then people went ahead and asked, sir, buy one get one free, what will happen? Government told the second one is not actually free, it is 2 supplied at the price of 1, and you will be getting the ITC of input services and capital goods. Government went ahead and told the second one is not free, you will get the ITC of both because it is 2 individual supplies supplied at the price of 1. ITC with respect to input service and capital goods shall be allowed. People went ahead and asked, sir, if I am going ahead and giving offers like buy 10,000 get 10% discount, buy 20,000 get 20% discount, buy 30,000 get 30% discount, buy more get more, then government went in and clarified these discounts which are there are shown in the invoices and there will be no impact on your input services and capital goods ka credit. All the credit shall be allowed to you. Right, everyone? The next one over here is circular with respect to original equipment manufacturer and component manufacturer. Everyone over here, one is a component manufacturer, one is the original equipment manufacturer. Original equipment manufacturer told the component manufacturer, you buy the mold, you make the item and give it to me. Right, everyone? But he could not go ahead, component manufacturer could not go ahead and find the mold, and hence original equipment manufacturer bought the mold and gave it to the component manufacturer free of cost. In this scenario, always remember, it was his obligation to buy the mold, which is fulfilled by the supplier. Supplier ka obligation fulfilled by the recipient. Supplier ka obligation fulfilled by the recipient. In this scenario, this mold ka ITC I will not get it. If I have taken, I have to reverse it. Now, when I go ahead and give the mold free of cost to him, and he goes ahead and makes the component and gives it to me, whatever is the value of supply, in that mold ka amortized amount also has to be added. Are we clear, everyone? However, if the contract was there, component manufacturer told original equipment manufacturer, you buy the mold and you give it to me, I will give you the component. In that scenario, it was my obligation to buy the mold. I bought the mold, gave it to him. In this scenario, when I buy the mold, I will get ITC also, and when he gives me the component, in that component ka value of supply, amortized amount of mold also will not be added. Always remember one thing, if contract was for supply of component using the mold and die of component manufacturer, but supplied by original equipment manufacturer, amortized cost of mold and die also will be added, and you as a original equipment manufacturer, your ITC also will be reversed because buying of mold was not your business. Can I go ahead, everyone? Then if contract was that the contract was for supply of component using mold and die of original equipment manufacturer, I bought and gave it to you, you made the component and give it to me, it was my business to buy the mold, I can take the credit, and also when you give me the component, in that there will be no addition also in the value of supply. I hope you guys are clear. Everyone over here, section number 18 is also important for your exam. Section number 18.1 becomes important. 18.3 which is important. The circulars which I feel are important. Section number 18.6 is also a good question to be asked in the exam, right everyone? Now, listen to me very carefully. We have gone ahead and concluded our discussion on ITC ka chapter. ITC chapter, section number 16. Section number 16.1, registered person is eligible. Section number 16.2, condition. In the condition, section number 16.2, AA is inserted, and rule number 36, sub rule 4 has been amended. Basically, what they are trying to tell is, you can take the ITC only if the amount is appearing in your GSTR 2B. Basically, the supplier has filed his GSTR 1, or he has disclosed those details in invoice furnishing facility, and it is appearing in your GSTR 2B. Only then you can take the credit. Section number 16.3, taken depreciation on the tax component, don't take ITC. Section number 16.4, maximum time limit to take the credit. Section number 17.1, business purpose, non-business purpose. If you are using something, you can take the credit only relating to business purpose. Section number 17.2, taxable supply and exempt supply. You can take the credit only respect to taxable supply, including zero-rated supply. How much to take, how much not to take, government told in rule number 42 and 43. Section number 17.3, exempt supply का definition, nil rated, wholly exempt, not taxable supply. RCM का supply, 1% of sale value of transaction in securities, and land and building का, land and completed building का stamp duty value. Interest income don't consider. Transportation of goods by a vessel from India outside India don't consider as exempt supply, but interest income in case of banking company is exempt supply. Done. Banking companies can go ahead with rule number 42 and 43, or they can apply rule number 38. 50% credit, distinct person 100% credit, block credit don't take, non-business purpose don't take. Section number 17.5, block credit, right everyone? Then section number 18 went ahead and told about 18.1, special circumstance. 18.2, invoices older than 1 year, no credit. 18.3, transfer of business in case of transfer of credit in case of transfer of business. Sir, section number 18.1, special circumstance. Special circumstance में no credit if invoices are older than 1 year. 18.3, transfer of business का case में transfer the credit. 18.4, sir, reversal of credit. 18.5, total bakwas. 18.6, sir, capital goods and plant and machinery का case में tax on which ITC was taken, tax on transaction value. Tax on transaction value or ITC reduced, whichever is higher. Always remember, I told you 3 circulars also over here. One is demerger wala, one is free gift wala, and one is original equipment manufacturer. Congratulations people, we are done with your chapter of input tax credit ka complete revision.